What's up, team? Hey, quick update here. Happy Monday to you. I want to get you dialed in as to what's going on here. I know I've been pretty optimistic about the possibility of rates bouncing back. I'm going to go ahead and just stomp on that right away here today. So I'll show you what rates look like. Also, a couple things we just need to pay attention to here. There's sort of a natural reaction that we have now, those of us who've lived through a real estate crash, which most of us adults have at this point. And so we tend to tie certain things to that, and it can give us a incorrect perception, which has cost a lot of people a lot of money. So we'll take a look at that as well today. I'm going to make this quick, try to stay on time for my next call, but the markets have closed, so we can take a look at this without having to worry about numbers moving. So let's first take a look at mortgage rates. You can see I've already been working on this. I actually sent out my first sort of State of the Union video to everyone who's in my client database. This is pre-approved individuals, people who have closed a loan with me before. I'm going to start doing that as the economic situation right now is quite crazy. And this is going to start impacting things it already has. And we're going to talk about some of that today. But there's more craziness coming. And so this next year, this whole year, 2021, is going to be filled with news. It's going to be filled with things that we need to pay attention to, things that are really big that can go under the radar. I'm going to try to be that light for you. So hopefully these are helpful to you. So let's take a look at this. You can see I've already been drawing on here. Here's the old trend line. That's gone. Although I do think we will come up and touch that trend line again one day. I think this whole thing right here is just going to be a thing. And we're going to come back up and we're going to touch that one of these days. But it looks like it's a ways off. So let's get that out of here for a second. This was the new trend line. Right? Much more abrupt. We also broke that. So what are we looking at now? What's kind of realistic now based on how some of this stuff is going? It kind of looks like this now, right? That seems to be what it is. So not quite as abrupt as the previous trend line, but still more so than the original one. And so right now rates have failed to rally. Mortgage bonds have failed to rally. Remember, mortgage bond prices, we want them to go up. That's what this arrow is a reminder of. We want those to go up because that creates lower rates. When these prices go down, that creates higher rates. And right now, basically what we have is we have a situation where rates are just expect rates to go higher. Expect rates to get worse. This is what's going to happen. This is what's been happening for the last 6 weeks. This appears to be the trend that's taking place. It's obvious now that the Fed has lost control of this, which I think is kind of good. You know, they're still in there as a buyer on behalf of us who want lower rates, but they're not a big enough buyer to completely control and manipulate the market. There's a lot of people exiting, and the reason that big investors would exit bonds in huge quantities is because of inflation. And that's what we're really facing here. So these are the things I want you to take away. Demand for real estate remains extremely strong. Why? Because inflation is here big time. So these are the three things today that I think are important to pay attention to. Expect rates to get worse. Right now, you can pick and choose your time to get into the market for a refinance or for purchase when you finally get in a contract, because the current state of the real estate market is a frenzy. Okay, we're in a frenzy mode. You would even call it a mania. It seems maniacal. I just got a call from a client who is about to put an offer in, and they're like, hey, what do we do to make our offer better besides writing over ask, removing appraisal contingency, shortening inspection timeframes, allowing the seller to stay in the home for up to 59 days rent-free. What else can we do? Our agent told us maybe we should talk about paying some of the seller's closing costs. That's where we're at right now. Buyers paying the seller's costs for closing. That's the step. So that is a mania situation. That is a frenzied situation. Here's the thing. A lot of people believe that when there's a frenzy like this, that means that the next step is a crash, right? Because the normal cycle is mania is followed by crash. Here's the problem though. This time, real estate, the push to real estate isn't necessarily for gains. How do we know that? Because there aren't very many people selling, right? This isn't just a trade that's taking place. This isn't just a trade. This is a situation where people are looking and seeing what's going on with their money. They're making no money. Look at your savings account. Look at how much interest they paid you last month. Cash is trash. It's garbage. So money's flowing into real estate. So rates getting worse has not done anything to curb demand at all. Demand for real estate is going to remain strong as long as we're in a cash is trash inflationary scenario, which we are in a major, major way, much worse than the Fed is telling us. So expect it to get more expensive to buy real estate, but not just one way, two ways. And this is where, you see a lot of people do calculations of the cost of waiting and things like that. There's two ways that real estate is going to get more expensive. Number one, real estate's going to get more expensive because prices are going to continue to go higher. There's a shortage of inventory throughout the country, especially here in San Diego and Southern California. But really, it's everywhere. That is going to cause prices to go higher. Real estate is going to become more expensive because rates are going to go up. And the sellers don't care if you're locked in at 3.25% instead of 3%. They don't care. Why would they? They've got 10 offers to choose from. They've got all these things going on. So, what you're going to see here is if you want to own a home and your strategy is, I'm going to wait because there's going to be a crash or there's going to be a correction or this has got to pull back at some point. You could be waiting for a very long time because what's driving this right now, this inflation we keep talking about. Yeah, I wish I could add that to the broadcast, that comment. That's my favorite emoji. This inflation isn't going away anytime soon. In fact, it's getting worse. Not only did the $1.9 trillion stimulus just go through, but they're already talking about a $3 trillion infrastructure. So the government is they don't care. They're just spending money, printing money. They don't care at all. They're not paying any attention to this. So they are going to make inflation so much worse. It seems almost now as if the Fed's role is to just try to talk us off the ledge, like try to make me seem crazy because I'm saying that there's rampant inflation. Oh, he's just crazy. He's a conspiracy theorist. No, I'm just talking about what's obvious and what you can see right in front of you. If you don't see inflation in every single thing that you purchase or look and research to purchase, look at any big ticket item. It's happening. It's happening in a major way. It's not 2%. It's way more. Some people are saying, really smart people are saying 18 to 30% is the inflation rate, which makes your cash even more trashy. So if you have that kind of situation, you're going to see money continue to flow into real estate. People have money saved, they've set aside. Where are you going to put it? You're going to put it in the stock market, which has been making new highs constantly. Valuations are through the roof. I mean, multiples are crazy in stocks. You're going to put them there. It's not a great place to enter the stock market necessarily. Maybe start chipping into it. Real estate. This is something people understand. I can buy that house and get this much rent. It makes sense. Not only that, but as inflation continues to get worse, hard assets will increase in value. Assets, not liabilities, hard assets. Your car isn't necessarily going to become worth more, although it might. That's the kind of inflation we're looking at right now, where car dealerships are calling people and saying, hey, do you have a car you can trade in? Because they have such crazy demand. Isn't that mind-boggling? This is not the same bad economy crash scenario that we had last time. And everyone keeps expecting the same result. That's not what's happening. There's something very, very different that's happening. Expect real estate and Bitcoin both continue to go much, much higher. And it has everything to do with inflation. It has everything to do with a desire to distance from central banking and governments controlling all this stuff. It has everything to do with those things. And those trends are going to continue. So I hate to say it, and you know this. And if you've listened to my radio show, watched my TV shows in the past, when I thought real estate was a bad idea, I said it. And guess what? Many times I was wrong. This right here is not that. This is not a situation where we just have a sluggish economy, or where you're seeing things slow down across the board. And no, things are getting faster, but there's more people getting left behind is what's happening. Everything's moving quicker. The shifts in these economies, the shifts in these investment vehicles, it's happening much faster than it's ever happened before. And a lot of people are getting left behind. A lot of people are going to wake up 2 or 3 years from now when real estate has doubled and Bitcoin's at $1 million, And they're going to go, what happened? What have I been doing the last 2 years? Why haven't I been paying attention? You might be watching this video on YouTube 2 years from now. That'd be a real stinger. So my suggestion is this: if you don't own your primary residence, buy one as soon as you can. Because remember, rates are still low. I mean, I'm talking about rates going up. We're still high 2s, low 3s. They're still low. Ultimately. It's still not expensive to borrow money. But when you see things like these Wall Street banks, investment banks, what was that story that we looked at earlier today? I wonder if I can still pull it up for you. Banks warn significant losses. Okay. So here's one of the things that you see. And remember, it's different. Banks warn significant losses as they exit positions with large U.S. hedge fund. The market's getting wonky. Weird things are happening. Hedge funds in a straight up market are getting margin called. Why? Well, the Main Street has decided to take on Wall Street. Wall Street bets. Remember those guys? They're officially ripping tens of billions of dollars out of the suits' pockets. How do you think they're going to react to that? What do you think is going to be their next move? Do you think they will fight it, or do you think they will join it? This is what I'm talking about. There's a massive, massive shift in everything going on right now. The safest thing to do is to buy real estate. This fixes all of the holes. It may not be an aggressive growth situation where you're going to double your money twice a year, like you have with Bitcoin for the last 10 years. It doubles twice a year, goes up 200% a year, analyzed the last 10 years. You're not going to have that, but you are going to have something that's a hard asset that you can see, that you can understand, that you don't need to take a class on to figure out what the hell is blockchain or anything like that. So those are really the two options I see right now. It's real estate. This is what everyone should be in. Be in real estate. Make no mistake. Inflation is here. It is big. And this is one easy way you can combat it. It's buy real estate. Okay. While rates are still low, they're going higher. Don't shoot the messenger. Rates are going to go higher. I did everything I could. I wore my green shirts. I did my meditations. I did everything I could to try to get rates to go down, and it's not happening. And now all of the smart people I follow are saying the same thing. Expect rates to get higher. Maybe they'll come back, but expect them to get higher. Okay. All right. I'm not going to fight it anymore. That's the trend. That's where we're at. That's not going to make real estate get any cheaper. We've already seen that. The inflation isn't going to make real estate get any cheaper. We know that for a fact. And if you think there is a better investment, the only other thing right now is real estate and Bitcoin. That's pretty much it. Bitcoin's more hyper aggressive. Real estate is safer. But look how many people are pouring into it. That's not going to stop. So the point of this video is to let you know that inflation's here. It's big and it's bad. I mean, it's not good. But inflation, you can actually win with. So when inflation comes, it really only hurts the people who didn't capitalize on it. Inflation hurts the people who don't have assets. Inflation hurts the people who don't own real estate. Inflation hurts the people who aren't paying attention to it, who don't know that it's here and don't know how to adjust their investment strategies for it. That's who it hurts. It doesn't just hurt everybody. Inflation will get many people rich. Many people. And I plan on being one of them. So it's just about the decisions you make, but you got to know it's happening first. And I know the government's not telling you, the Fed's not telling you. Nobody, CNBC isn't telling anybody, so that's why I'm here to tell you. Okay. I am 1 minute late, so I better get to it. Hopefully this is helpful. Didn't mean to get on a soapbox here, but I do want you to know what's going on. There's major things changing in the world of finance. There's major things changing in the world of investments. And the one thing that's really always true is that real estate wins. It works always. It always works and always will, as it has a practical application that everyone needs. Okay. Imagine real estate is like a toothbrush you don't throw away. Everyone needs it. You have to have it. You have to live somewhere. So that is always going to work. Hard asset, high use case, limited quantity. This is something we're really starting to realize. Limited quantity, absolute use case and hard asset to combat inflation. Real estate. It just doesn't get any better than that. Now, you may get more returns if you were more aggressive and do Bitcoin and some of the other things like I'm doing. But if you want the safe bet, it's real estate. And I'm not the guy who's ever out here saying, you have to do it now. You have to buy now, or you'll regret it. I'm now saying that. Never said that before. I have to tell you now that it's although it seems crazy with all this mania and everything that's going on, get in the game, be persistent, be patient, but persistent, and don't let this market tell you that you can't own a house. Okay? My two greatest fears for our country and for all of us Americans who love this country is that one day people won't be able to buy real estate. There's two ways this scenario happens, and I prognosticated this significantly on my radio show back in the crash, when we found out that there were significant hedge funds buying billions of dollars worth of real estate, single-family homes in San Diego. Why would they do that? Well, eventually the elites want to own all the real estate. There's no question about that. It's a hard thing to do. It takes a lot of money, takes a lot of time, takes crashes where you can go in and scoop it up in large quantities and not buy one house at a time. They want to buy 30, 40, 300 houses at a time. That's one case scenario. Sounds like a conspiracy theory, but then we watched it play out. The other one is inflation is so rampant that housing prices go up so much, you don't have a choice. You have to move. You have to go somewhere else. Or if you want to buy a house anyway, or you have to pay astronomical rent, which never allows you to save any money to buy a house of your own. That's what's happening right now. So market crashes, Wall Street will come in, elites will buy all the real estate, and you'll only be able to rent. Right now, inflation comes in, and you've got to get something. You have to own something. Okay? If nothing else, just as a hedge against inflation, a nice tax deduction vehicle. You know, there's lots of good reasons to own real estate, but I'm not the guy who ever blows the whistle. I never come on here and say you have to buy. I'm saying it now. You have to, because if you don't, it's quite possible, and I've already watched this happen to dozens of people, you get priced out. And when you get priced out of San Diego, what happens? You go and you buy somewhere else. And when you leave here with your California mindset to go buy in Las Vegas or Arizona or wherever it is you go, Idaho, doesn't matter. You go there with your California mindset, and you know what you do? You're pricing out the people who live there, who've been watching real estate there and have grown up there. Because you're like, oh, 440,000? This place is a palace. You can never get anything near that in California. So in your mindset, it's a great deal. People who've lived there their whole life, they're like, this house was $100,000 when I was a kid. And then they get to roll down. You see what I'm saying? This is how the cookie crumbles. And it's starting to crumble. This is good if you're one of the few who can take advantage of it, who knows how it works, and can enrich yourselves. If you're not, or if you think that, well, you know, I'll just wait. I can maybe barely afford to buy a house right now. I'll wait till prices come down. Good luck. Good luck. I hope you have another strategy. I hope you have another place to put your money that's going to be safe, because the bank ain't it. So I hope you have something else going on, a business, a way to bet on yourself in some way that's going to help you overcome the deficit that this inflation is creating, which is burning cash at the rate of at least 15%, meaning that your cash is worth 15% less year over year based on the amount of money that's being printed right now. So if your cash is worth 15% less year over year, just based on money supply, that's it, then you have to be invested in something that's going to make that with your cash year over year, or you're losing money. It's the reason why the bond market's getting killed, right? Bond market is where big boys play, okay? That is not where little investors or retail guys or Robinhood traders are. No, that's institutions. That's nations who are playing in there, and they are getting out. Why? Inflation. That's why. So where are they going to put their money? Personally, I hope they put it in Bitcoin. I really do. And I think they will. But because it's hard for them to buy real estate. See, this is the advantage. Sometimes when you're in a smaller boat, it's better. Those guys are the Titanic. It's hard to miss icebergs when you're the Titanic. When you're in a speedboat, and as an individual, especially if you're the head of your household, you're making the financial decisions for your home, you need to be on top of this. You need to be on top of this. You need to be a speedboat. Don't be a speedboat that moves like the Titanic. Be a speedboat that moves like a speedboat. See these trends, see what's going on. It's funny. Dave, I just saw your comment about you're not sharing your toothbrush. Sorry, I haven't put any comments up yet. I'm just ranting because there's major things taking place in our country and our financial system right now, and I just don't see enough people talking about it. This is what's happening, and it's real, and it's here, and you need to grab your piece of this country. You need to buy your piece, get your piece sooner rather than later. And that's not, I mean, you can listen to me or not listen to me. It's not some warning. It's not a threat. I'm just telling you. You'll see this unfold. It's unfolding, and it has just begun. Think about that. It has just begun. And the economy, by the way, could be a whole lot better. Let's not forget that. The economy has been hit pretty hard by COVID. When you say, do you know anyone who's had a hard time with COVID? Yeah, there's lots of people, right? The economy will recover as things reopen. This is, even the Fed said this, we may see a little inflation when we reopen. And remember how biased the Fed is. They're trying to lie to us. They are trying to make us be domicile. They're trying to domicile us. They're patronizing us. But you can see this happening. And when we reopen and when things pick back up and when the economy actually starts chugging again, what do you think is going to happen? Do you think that people are going to say, oh, well, we don't need real estate anymore. Let's go back to work? Or do you think there will be even more people getting in the game? People who don't qualify right now because they only have one income, and then husband or wife goes and gets the full-time job, and boom, now you can use that and then qualify. What do you think is going to happen? It's going to get worse. There will be more competition, rates will be higher, and prices will be higher. That's where we're headed. This isn't what I want. This is just what's happening, and you can't ignore it. It's the reality of the situation. So I hope that this lands nicely. I kind of feel like I've been yelling. Apologize for that. But you know where my head is at. I help people manage their money. I mean, getting someone a home loan, that's 100% about managing the biggest liability you have. Super, super crucial. The last thing I want you to do is 2 years from now. No! Should have listened to Evans. What was I doing? This is it. This is me sounding the alarm. This is me sounding the alarm. Wake up, guys. Don't fall asleep with these announcements and this government that's trying to make you complacent. Pay attention where the money is moving, and particularly where it's not moving. Know what's going on. Take advantage of it. This is the time. All right. That's it for today. Share this if you think this would be helpful for your friends. I appreciate you guys. Tony, Dave, everybody who's commenting there. Appreciate you guys. I will see you again soon. We're going to have a lot to talk about.